AMC, one of the market's most talked about turnaround stories. But is it really turning around? Or is the hype masking a deeper decline? Don't buy or sell AMC until you've finished this video. Because in the next few minutes, we're going to break down AMC from every angle. The chart, the fundamentals, and institutional ownership to see whether this stock is truly setting up for a reversal or if it's still firmly locked in a stage 4 decline. And make sure to stay until the end, because I'll show you a simple but powerful analytical tool that professional investors use to decide when it's safe to buy. Not just AMC, but any stock you're considering trading. It's a market timing signal that can help you avoid buying into weakness and only take positions when the broader market is on your side. So let's start by looking at the chart, because price action always tells the truth, long before the headlines do. On the long-term chart, AMC reached a peak in June of 2021, around $726 per share. Since then, the stock has been locked in a stage 4 downtrend, in the terminology of Stan Weinstein, a prolonged decline marked by a persistent pattern of lower highs and lower lows, and no meaningful signs of reversal in the long-term trend. The stock made a rally attempt on May 16, 2025, after trading in the $2.60 to $2.80 range. It reached a local high just above $4 on May 27th, which came with a big spike in trading volume. However, the rally was short-lived. The stock quickly corrected in June, then made a second rally attempt in early July, but it did not succeed in obtaining its previous high. It then began correcting again in late July and continued into early August, making an even deeper low than before. In August, the stock made another rally attempt, again failing to reach its previous high, and corrected swiftly later in the month, reaching a new lower low in early September, even weaker than the previous correction. The final rally attempt came in early October, resulting in a local peak around $3.18. But this rally was met with swift selling on high volume, and the stock once again turned lower. It now sits around $2.40, which is even lower than the lowest low from April 4, 2025. Suggesting a sharp continuation in the downtrend. The key thing to note is that volume has expanded rapidly since September, particularly on the sell-offs. This is a very bearish indicator, suggesting that investors are dumping shares in high volume rather than accumulating them. Adding to this weakness, since May, the overall market has been in a clear uptrend, while AMC has continued to trend lower. This divergence in direction highlights a decline in relative strength, a critical warning sign that the stock is underperforming the market. The long-term downtrend, the persistent sequence of failed rally attempts, the surge in selling volume, and the declining relative strength versus the broader market all point to the same conclusion. AMC remains a stock in stage 4 decline, with no evidence of a bottom. We want to look for stocks that have not only finished their stage 4 decline, but have also entered into stage 1. Showing signs of basing and preparing to transition into stage 2, the early phase of a long-term uptrend. At this point, AMC does not fit that profile. It continues to underperform, showing no evidence of institutional support or accumulation. Until we see a flattening base, shrinking volatility, and a meaningful breakout on strong volume, AMC remains a stock in decline, a textbook stage 4 pattern. Now looking at the fundamentals, AMC's financials paint a picture of a company that's stabilized compared to its pandemic lows, but still struggling to regain consistent growth and profitability. Revenue has improved sharply since 2021, showing that audiences have returned to theaters and demand has recovered. But if we look closer, revenue in 2024 is roughly flat compared to 2023, indicating that growth has stalled. For a true turnaround, we want to see consistent year-over-year revenue growth, because that's what drives sustainable earnings expansion. On the operating income side, AMC has spent several years in the red. While 2025 is set to end slightly positive, it's not the trend we're looking for. The ideal pattern is a clear, steady progression of profitability, positive operating income that continues to grow and even accelerate. Right now, AMC's results show only sporadic improvement, not the kind of structural earnings strength that signals a lasting recovery. When we move to the cash flow statement, the picture becomes even clearer. Operating cash flow has remained negative, which means AMC is still spending more cash than it generates from its core business. In simple terms, the company is financing its losses by drawing down cash reserves rather than producing cash through operations. AMC was able to raise significant capital in 2023 through debt and equity issuance, which temporarily boosted its cash position. But since then, those reserves have been declining steadily, showing that the company has been burning through that capital just to stay afloat. This is not what we want to see in a turnaround story. Strong companies generate positive operating cash flow that confirms the strength of their earnings, not negative cash flow that contradicts them. Overall, AMC's fundamentals remain weak and inconsistent. Revenue growth has stalled, profits lack momentum, and cash flow remains negative. Until the company can demonstrate steady earnings growth backed by positive operating cash flow, the fundamentals continue to confirm what the chart already shows. AMC is still deep in its recovery phase and not yet positioned for long-term leadership. Now, let's take a look at institutional ownership, one of the most important indicators of whether big money is accumulating or exiting a stock. AMC's institutional ownership has been in a steady decline since the fourth quarter of 2021, when 13F filings reached a peak of around 405 institutional holders. Since then, ownership has consistently trended lower, showing that large investors have been reducing their positions quarter after quarter. The most significant drop came in quarter 3 of 2023, following AMC's share restructuring, which caused many institutions to reassess or exit their holdings. Over the past year alone, institutional ownership has fallen by more than 9%, confirming that the stock continues to lose sponsorship from large funds. That's not what we want to see. In strong stocks, we look for steadily increasing institutional ownership, a sign that major investors are quietly accumulating shares ahead of an uptrend. Instead, AAMC shows the opposite: consistent distribution. This lack of accumulation aligns perfectly with the chart and fundamentals. The smart money is not moving in, and that's a major red flag for any potential turnaround story. Remember at the beginning of the video, I said there's a simple analytical tool that can help you decide when it's safe to buy, not just AMC, but any stock you're considering trading. That tool is called Distribution Day Counting, a concept championed by William O'Neill, founder of Investors Business Daily. A distribution day occurs when the S&P 500 declines 0.2% or more on volume higher than the previous session. 1 or 2 of these are normal, but when you start seeing 6 or more within a rolling 25-day period, that's a clear signal that institutions are selling, and the market could be preparing to roll over. Right now, the market is still in good shape, but it's close to the edge. We're sitting at 5 distribution days, with the most recent recorded on Thursday. If the market can make it through this week without another, the count will drop to 4. That would be constructive. But if we get one more, it climbs back to 6. And that's a bearish warning that the uptrend could be breaking down. And this matters because even if AMC shows short-term strength, buying into a weakening market rarely works. The odds are always better when the broader market confirms the move. Here's how you can do it too. Go to Yahoo Finance and search for S&P 500 Index. Make sure it says SPX, not SPY, or any futures contract. The exact ticker should appear as SPX at the top of the page. Click on the Historical Data tab. Download or copy at least the last 25 daily entries into Excel. Identify every row where the adjusted close decreased by negative 0.2% or more, and where volume was higher than the previous day's volume. Count how many of those distribution days occurred in that 25-day window. Right now, that count sits at 5. However, the distribution days from October 9th and October 10th will drop off this week, which would bring the count down to 3, as long as no new ones appear. Remember, 6 distribution days in a 25-day period is a sell signal, a warning that institutional selling is gaining control. So before buying AMC or any stock, check the distribution day count. It's one of the simplest and most effective ways to stay aligned with the market and avoid fighting against institutional selling.